YouTube, it's your boy Zamba. Welcome back to another banger. So in today's video, I'm gonna be showing you guys something. Do well to watch to the end, because if you miss it, you're gonna get the wrong information. Yes. So if you have been trading support and resistance, you have been trading trend lines and all of that, but you don't know the exact point where the market will likely turn, reverse, make a continuation, and the ultimate, your entry and exit. In today's video, I'm going to be showing you guys the ultimate support and resistance trading strategy you will ever need. So stick to the end, because this is not just about support and resistance. Like I said earlier, it's also your total way of trading, your final decision you make before you enter any single trade. Let's get it. Now, we are gonna go to any time frame, but remember, the higher time frame, the better. Okay. Now, the first thing you need to do when marking your support and resistance is to know the beginning, the first day, like the first candlestick of the first of that beginning, the beginning of the first day. Okay, let me explain. Now you see the week. This is the entire week. So we are marking out the first candlestick from the first day of the week, which is Monday. So we are going to go back to Monday. Now Monday is on the 20. What's Monday? Okay, here's Monday, right here. So this is Monday, and we are gonna mark out this level here. Okay, we are gonna mark out this level from this level is what we are gonna mark out. Okay, now remember, the first candlestick from the first day, or first day of the week. Now this is Monday, so guess what, we mark that out and we extend to the future, to as far back as, let's say the current day, like today for example, right? So the market has not gone anywhere near there, but no problem, we are just gonna hold the entire structure. Now what do we have here? We zoom in, and first thing what the market did was, if you look initially, if you draw again, we are going to notice that there was also a support, a resistance level at that same point, right, which is a strong zone. Now when the market comes to this level, since we have marked this place out, we are going to look for our entry here. Our entry zone will be here, our stop loss will be right above here. So let's say you entered after this fake out, then your stop loss will be right above here, and then your TP will be here. But if you enter around here, you will put your stop loss a little bit. Let's say your stop loss was hit, and then it gave you another confirmation to enter, then you can enter. But there is also a re-entry here as well, so that will give us another rule. But just notice, or pretty much just understand the first rule, which is mark out the first candlestick from the beginning of the week. All right, and then you extend to the future. Now it's time for you to start using your technique. Now this is your first trade. This will likely be your first trade, or the other, this will be your first. Let me just mark it out. This will be your first trade. This will be your second trade right there. Then if you look at this, these are your third trades, third and fourth trade right here. So the market came to this, it broke this level finally, and then guess what, it came back and it gave you a confirmation to enter using your strategy. Remember, using this support and resistance is a confluence, it's like a structure you follow, right? Now we are talking about the entry and exit. You enter here, put your stop loss right above this level. Remember, always give your stop loss room to breathe. That is the main thing. Make sure that your stop loss have space. Remember, your risk capital is the key. So if your stop loss is okay at a very good zone and it fits your risk criteria, then go for it. If it doesn't, just forget about it. Okay, so now guess what, this is actually another setup right here. As you guys can see, this zone, right? So having this zone, we have first tap, the market came to went up, gave us some pips, came down, right, and then broke. Now the moment it broke, what happened? All the way down. Look at how the market went all the way down. Now when the market came up again and it broke the structure, guess what, the market went all the way up. So you see, this is the first rule. Now the second rule when trading this strategy is we make sure that there is always a fake out at that zone. Yeah, there's always a fake out. So I will show you guys an example from this our trade here. I don't want to go far. I don't want to waste too much time. I want to just give you guys a straightforward pattern to follow. All right, so we have a weak rejection here. Always remember the fake outs, the weak rejection, they are all the same. Okay, so we mark out this. Since we already marked this level out, now we monitor this entire zone and you see there was a fake out. Good, which shows a strong support. It shows that this area will be held responsible if your stop loss is hit. But I'm just trying to give you guys the entire idea. Now guess what, the market broke the structure and guess what, boom. So meaning this was a very good zone to enter from. Why? Because of a liquidity grab or a fake out or a weak rejection, so this entire zone is a very good zone to enter. Now let's look at the sell scenario, right? So if you look at the sell scenario, guess what, there was a liquidity grab, boom, a liquidity grab, a liquidity sweep, whatever you want to call it, boom, it faked out, another word for it, and guess what, the market went all the way down. Now when the market comes to that zone again, you wait for a condition or a confluence, right, a confirmation, whatever pattern you use, whatever analysis method, trade entry you use, guess what, this is where you are going to be looking at, this entire zone. And when the market give you that confirmation, you enter. If your stop loss was hit and the market still gives you another confirmation, that is another safe zone to enter from. And look at how the market went all the way down. So the second, that's actually the two rules that you need for trading support and resistance. Very, very important rule. Now a bonus rule to it is actually a bonus rule is the support and resistance must come from a liquidity sweep. Now this is a different part. Okay, the second rule is actually there must be a liquidity sweep at that level, but we are talking about the support zone. Like the support zone, what before it was formed, what happened before that particular support zone was formed. Now if you look at this level here, we have the first day. Let me extend, right? Let me extend. Look at it. We have the first candle, right? This is the first candle, like I said, that we need to draw, right? Guess what, did it liquidate anything? Yes, it did a sweep at this level right here. Now since it swept this level, we know that this is a powerful zone for us. Now if it doesn't sweep this level, that doesn't mean it might not hold. The market is very tricky. It can do whatever it wants. So this is just a pattern for us to follow and a rule-based pattern, right? Now look at this carefully. We saw that the market liquidated this area and guess what, boom, there was a sell. Now this is our zone that we marked out from the first day, from the first day of the week, right? Good. Now guess what, the market came to this area and liquidated this area, Now tell me in your mind, just tell me, why would the market not sell? After a confirmation, don't get it twisted. The market can just retest and start going up. Remember, after your confirmation, you are not trading what you feel, you are trading what you see. After your confirmation, what happened? The market sold off. That's what we are talking about now. So the first rule is you extend the support zone from the first day of the week. The second rule is actually you trade after a liquidity grab. There must be a liquidity grab on that zone. Number 3 is the support zone before it was even formed. It should liquidate an area before it will be called a support zone. It can still, remember this third rule, it can still be called a support zone even without liquidation in the beginning. But remember, we have an A setup, a B setup, a C setup. So always make sure that it's something of high value before you take that trade. So guys, this is how you trade using the support and resistance. You go back to your chart. The previous days, the recent days and the rest of them, look at the structures by yourself. There are times of the day, times of the week where the support zone is very, 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 very accurate. You have sniper entries, so do well to go back in time. Right, the market is closed right now because this is actually the last day of the month, so I want to drop this video for you guys, this banger as always. And don't forget to like this video if you found this video helpful. I know you do. And do well to click the link on my video description to join my free Telegram channel. And also you want to reach out to me on a personal level, you want to get in depth. Now there's something I want to really talk about. Tomorrow is next month, right, which is December 1st 2025. I have a special offer for you guys, so do well to stay subscribed. I love you guys. Stay safe, happy trading, and peace. Custom on the beat.